Good evening, everybody. We've had nice spring weather here in Pittsburgh, and tonight we're going to get snow. So back in my younger days, this was the exact reason why I picked up and headed for Houston, Texas. Yeah, I'm going to stay indoors. As a matter of fact, we left a little bit on the wood pile to have a fire in the fireplace if we need to. Okay, we're going to do our two-part session tonight. Everybody likes to see a little bit of a topic for our these trainings. And the thing that I've been getting a lot of requests for is a few weeks ago we did the 2-day training session for doing the kind of the whole session through the signals, the patterns, the entry and exit strategies. And so we're going to be going into a little bit more sophisticated analysis once everybody has that information under their hat. One session or one training that I have just completed is that the rhetorical question we always get from new people as well as existing members is, which signals and patterns are the best? And the answer to that is always, it all depends on what the market conditions are. We've already narrowed down that there's 12 major signals, and that's reducing them, the 12 down from the 50 or 60 candlestick signals out there. So what we've done is we've done a training session, or four video training sessions on the best signals and patterns with the dojis, the other signals, the patterns, and then we put them all in order. So the first one that we're working with is the best friend, and it's because of the doji. The doji is that day or that time frame of indecision, where the bulls and the bears are getting ready to do something else. So because we know what the formation of a doji looks like, then we've got a lot of expectations of what to be looking for. So that's the whole process of investing, is how do we identify the patterns and the signals that tell us we're ready for our next price move. Yes, so Jim kind of put in the definition of your best friend. So if we know the definition of a doji, which is indecision between the bulls and the bears, where they open and close right at the same level, and then on top of that, we know the simple doji rule that the price will usually move in the direction of how they open. So where do the dojis work most effectively? Usually when the stochastics are in the oversold area. So our optimal criteria is looking for signals, looking to see, and this is on the bullish side, they work just as effective on the bearish side, but the bearish side stochastics would be in the overbought condition. We're looking for a gap up from that doji signal. And we wanted more confirmation with a close above the T line. So rhetorically, what does a gap represent? That usually tells you there's like an extremely strong force in whatever direction it's going to tell you that after a day of indecision, if they gap it up, that's your best friend signal. The reason we've named it your best friend is because not only are the probabilities that you're going to be in an uptrend, but the probabilities that the trend is going to be extremely strong. It works both on the positive side. If we see an uptrend starting, again, a doji followed by a gap down tells you it's time to be out of that position. So this is not rocket science. This is just looking for a doji in the oversold condition. And if we've found it and we have it on our watch list, the next day they're gapping it up and trading it positive, we want to be buying because the probabilities now tell us we're heading in the right direction. Now, I was noticing earlier that some people were saying that they were having a hard time getting that 67% positive trades, stick with it. You will have that probability. Now, obviously, in this market condition over the last few weeks with it moving sideways, you might have to be a little bit more nimble and or expect that whatever positions you're putting on, because the market's not moving, you're going to be in and out of trades. So the important factor is part of that money management element, that if you've got 10 positions on in your, what I call the money management system that kind of eliminates the emotions out of your trading, that at any given time, you're probably going to have 6 or 7 of those trades working in the right direction, whether you're long, short, or long and short. I've gotten off track. So what we're trying to do is obviously find the situations where we've got candlestick buy signal in the oversold area followed by a gap up, your best friend, so that we're watching to see when the high probability trades are occurring. Notice where this one occurred. Stochastics in the oversold area, doji at the bottom, gap up through the T-line in the 50. Can oversold be below 50 or has to be? No. The moving averages mean absolutely nothing. The oversold is based upon where you are in your stochastics. Does the kicker signal preceded by a hammer work almost as well? Probably that's not a kicker signal. That's a hammer signal being confirmed. Yes, this is a morning star. Big down day, day of indecision. Third day, it closes back up more than halfway up this candle. And if they gapped it up to get there, that's one piece of evidence. This is what I call convergence analysis. 50 on stochastics. Max, I don't understand what that. 50 on stochastics. No, the stochastics are in the oversold area. The reverse will happen right here at the stochastics. When is a gap valid? Only on the close or the open price. Not looking at the shadows. Let's see. When is a gap valid? Only the close and open price. Oh, no, you still want to, the gap is that there's no trading in here. So the gap is, it's gapping up usually above any of the trading range. Now that doesn't preclude that if you have a long-legged doji, that they gap it up toward the higher end and start going positive. Yes, they still gapped it up from the close, but the most powerful ones are when you have that empty space in here. Do you like to use 12 as a length? Yes, that's only because it's worked successfully for me for the last 40 years. Yes, there is recordings on these. I think Max was asking about 50 and 20 levels on stochastics. Below 20, you're in the oversold area. Above 80, you're in the overbought area. 50 is just the halfway point, so 50 doesn't mean anything. Oh, is everybody still seeing the getting Bert? You might have to log off and log right back on again. You might be stuck. All right, lots of questions here. The Stochastics oversold to me seem to be my missing piece. I am sometimes too exuberant and buy the gap when it's not oversold. Yes, if you're buying the gap, remember we're gonna have information. We're doing a special. This is kind of a pre-promo. We're getting a lot of questions from people when we direct them to our products and services, telling them which trainings to buy. a lot of them are coming back and saying, well, that's a lot of money that I can spend right now. So we're going to do a special at the end here so that you can get the pertinent information that you need. The gap doesn't necessarily, remember, we're buying the signal followed by a gap. Now, obviously, the bigger the gap, more powerful the indication the bulls are stepping in. So also, we can add the element, how far away are we from the T line? So we see a doji in the oversold area followed by a gap up. At least we know where our next likely target is. Now, this is where knowing all your signals and patterns start coming into play. Because once it got up here, what are we looking for? Well, we know we've had a strong reversal, but we know the T line is a potential resistance level. They open up positive the next day. Still kind of iffy, but we're still in the right direction. Next day, they take it back up. So now we've got a doji sandwich. So we start off with that morning star signal with the best friend gap up on this side of the signal, followed by a doji sandwich. Probabilities now become immensely more in our favor that we're heading for the next level. So once it hits there with your best friend, remember the gaps are what we want to analyze. That when you see a gap up in the oversold area, that's exactly where you want to see the strength coming in. A gap up in the overbought area, that's the basic of candlestick analysis where the Japanese rice traders told us or illustrate to us where do most people sell. They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. So when we start seeing exuberance at the top, which is that gap up in the overbought area, we start looking for sell signals. So the best friend signal is utilizing the information that tells us what's going on in investor sentiment. A bunch of dojis right here below the T line, then they gap it up above the T line. After a doji, your best friend, the probabilities are pretty strong you're heading in that direction. Anytime I see a doji in the oversold area, I'm looking for bullish confirmation. That's good. There's a hammer doji, bullish confirmation. That's good. Doji in the oversold area followed by a gap up. That's mega good. That's even more compelling. So what we've done is putting everything in order as far as our analysis is that we want to find the ones that produce high profits, number one. Number two, with great consistency. So we can apply candlestick common sense to any trade that we're doing. The recommendation on cool was based upon coming out of a fry pan bottom, coming out of a J hook, coming out of a J hook. And then we also know what to do on the other side of the trade. When is it time to sell? Well, we also know that our T line, whoops, no wonder people weren't asking questions. We're way stuck up here. And you're going to have, if we're going so fast, you'd have to ask which chart we're looking at. The ticker candle bottom has to be above half the red candle. No. Ticker signal is when it trades at or above the open of the previous red candle. Is your exit signal a lower low if a signal fails? Is your exit signal a lower low if a signal fails? AQ, I don't understand that. I am going to be, George, I'm doing a training on, or a video on using volume with candlesticks. And that's the reason we're doing that is because a lot of people ask that question. And the answer is that volume and price have absolutely nothing to do with each other. A lot of people say, I want to see the volume going up as the price is going up. Volume as the price is going up means nothing, because if nobody wants to sell stock and people want to buy it, it might be going up in low volume. But there are a couple instances where volume becomes another confirming indicator. If on the day of, the day after, the day before, a reversal signal, you see a large volume spike, and it's happening in an oversold or overbought condition, pretty logical that there's been a big exchange of ownership of that stock. On the other hand, one of the scanning techniques is you find the stocks that had the big volume moves or a spike on any given day. Then you could go and see what type of signals were created on that day, whether there was a reversal signals. Are the scans only available to members, as I can't find them on the website? No, Shelley, they are on the website. If you will email Abraham at candlestickforum.com, he'll get you the link. But if you go to www.candlestickforum.com, that left-hand column, down the left-hand column, there should be something that says signals and patterns, and then it goes to the formulas for TCNet. They're all in there. What's the duration of the chart you're looking at? Doesn't matter. This one happened to extend it out a little bit more just to show you this. But normally it'd be cut off right about here, watching what's going on at this point. The only reason I have any distance on a chart is just so I can see it clearly. Doesn't matter whether you're going back 2 months, 3 months, 6 months. It's whatever you're looking at. So the whole process of, he means daily. Oh, this one's daily. The most of the ones that we're looking at right now are daily. And that's based upon the time frame that you want to trade. If you're a day trader, you might be looking at the 1 minute, 5 minute, 10-minute chart. If you're a swing trader like myself, you want to be looking at the daily charts. But there are times when you go to the intraday charts. For example, what's our caveat about the T-line? The further away you move from the T-line, the higher the probability it's going to come back and test it. Yeah, there's also the scans over on Metastock. If volume is a lot higher than on normal days, doesn't that mean smart money is stepping in? Usually, and that's why I'm putting out the video to show you when there's a volume spike, especially at a reversal point. That means a lot of the panic selling is being bought up by the smart money. What is the advantage of TC2000? Nothing. It's just another scanning. It's a good, easy one to use. I've been using it back since 1993 or so. The T-line, David, is one of our basic, or one of your most effective trend analytical tools. The T-line is the 8 exponential moving average. Now get off track here a little bit. Every chart we have has the 200 simple moving average, the 50-day simple moving average, and the 20-day simple moving average. They're on our charts because every major money manager around the world uses those to make their decisions about buying or selling in their portfolio. The advantage we have is we can see exactly what the investor sentiment is at those levels. Now the T-line is the 8 exponential moving average. We call it the T-line because it's the trigger line. Basically, if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. With the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. Now, the 200, the 50, and the 20 act like magnets because everybody has those on their charts and they're waiting to see what happens at those levels. The T-line, nobody uses that. Or the number of people that you can see the 3 T-line is very thin in here somewhere. But nobody has the T-line on their chart. And I tell people, put it on your chart and see how effective it works. Now, the reason it works so effectively is, and this is kind of the whole basis of successful trading in candlesticks, is if candlestick signals are the graphic depiction of what's going on in investor sentiment, which is a very, what do I say, very high probability analytical tool, because investor sentiment works the same way day after day, week after week, year after year, century after century. Human nature always works the same way. Then if you add the T-line, which has Fibonacci characteristics, that it's a natural support and resistance level, when you combine those two, you've got a very high probability trade situation or trade scanning. It's confirmed. I'm a nobody. You know, Jamie, you're just above a nobody because you got the T-line on. Does the T-line have any correlation with Fibonacci retracements? We'll get to that. The Fibonacci retracements, probably not. But let's go back to this. If we're this far away from the T-line, big profits. And what do we expect coming out of a fry pan bottom? A very strong price move. We're expecting big profits. But if we wait for it to close back below the T-line or the T-line to come up, we might be giving a big percentage gain of our profits away. So once we get up here and we can analyze we're too far away from the T-line, then we can just go to our 10-minute chart. And once we see a huge percentage away from the T-line on the daily, we get ready to start taking profits if it comes back down through the 10-minute T-line. Why has this become more effective? Because we're way up here. If the 10-minute is starting to fade, that's a good time to start taking profits. All right, thank you, Gary. Let's see. All right, so again, when to buy back? Well, we know it's going to come back and test the T-line, and there's our bullish harami on the T-line, telling us the T-line's acting support, and they're buying again. So the nice thing about candlestick charts is, look how simple this is. Now, if you want to throw on the Fibonacci numbers, start from here, go up to here. The retracement is right back here, right smack dab on the T-line. Wouldn't use the Fibonacci numbers. I say I wouldn't use them. You could throw the Fibonacci numbers on just to get added confirmation of where the reversal might be heading up. If it came back down here and all of a sudden we saw a buy signal, that would tell us the 50% retracement level was acting effectively. So again, this is not rocket science. We know prices move in patterns, and we know using just simple common sense logic of what human nature normally does, gets us out of positions at their correct place, gets us back in. They get us out, get us back in. So is your T-line the same as the 50-day moving average? No. The T-line is the 8 exponential moving average. Remember, here's the 20, here's the 50, and here's the 200. Okay, so again, we're getting a lot of questions on how do we get this information. Pat has put out a special, and Becky, do we have the link? Let's see. I usually screw this up. All right, we're putting out this bundle. Now, this is usually more expensive, but this is a lot of information. You're going to get the entry and exit strategies. You're going to get the stop loss strategies. You're going to learn how to identify better opportunities using trend analysis, using the patterns of the major movement at the major moving averages, how to project your price targets, and how to use the gaps to your advantage. Now, this is normally, I think, about an 800 plus package. I think this package we're doing for $497. Now, that sounds a little bit expensive, but I know a lot of people do their promotions by saying, oh, all you have to do is have one positive trade and you'll pay for this whole package. That to me seems like poppycock. What we want to really instill into people's training or their minds is that you're going to get information that you're not going to be worrying about the next profitable trade to pay for this. The information you're going to be getting is something you're going to use for your analysis from here on in. So no matter who you're following or what type of trading program that's already working for you or you're trying to make work for you, if you put the candlestick signals on top of it and you know the kind of the logic built into the entry, exit, stop losses, how to use the moving averages, things like that, you're going to dramatically improve your probabilities of being in the right trades at the right time, and you're going to eliminate our most hazardous element that we have for successful trading, and that's our own emotions. So part of that, controlling your emotions, is learning just some simple statistics. At least 33% of the trades are going to be losers. So that's going to be just as important to know as what to do with the winning trades, how to get out of those trades as fast as possible. I don't know whether they rescheduled the options trading or options class. Why? It's going to be fairly soon, though. There was some sort of scheduled conflict. T, candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. It doesn't matter whether you're trading stocks, bonds, futures, currencies, tulip bulbs, anything that has fear and greed in it. Candlestick signals is the graphic depiction of what's going on in investor sentiment. You meant to say rocket. Oh, this is rocket science. How does rocket science do in this market? No, this isn't rocket science. Just think of it this way. I was the worst investor in the world until when I got out of the brokerage business. I left doing candlesticks or left being a broker because I realized that nobody in the brokerage business had any more idea what made prices go up or down than anybody else. All right, so if you'll hang on for a second, I'm going to turn off the projector and we'll go to live charts. Let's see, Jim, news analyze what's going on in each one of the signals and patterns, and just kind of break it down to what common sense tells us is going on in investor sentiment. Okay, you all set? All right. So as we saw in the Dow, we saw the strong price move. We saw our best friend, Doji gap up above the T-line in the Dow that started our next uptrend. Same scenario. Where do most people buy? Buy exuberantly at the top. When we see a gap up in the overbought condition, what's the next thing we want to be watching for? Our selling. That told us that this was probably an area to start taking profits if things didn't confirm upside. Now, where do they usually move back to? To a moving average that everybody and their brother is watching. You can see we've had 2 or 3 days now where they've come down and toyed with the 50. Haven't been able to go through. Stochastic still slowly coming up. Now, yesterday was a disappointing day in the sense that you had a left-right combo. I'll make this a little bit bigger. Again, the left-right combo is one of your strongest reversal signals, and it confirmed. They took it up strong. But the fact that they brought it back down through the halfway point of the candle that told you the bulls are taking control and closing below the T-line, it was pretty much telling you the bulls aren't there. So we're back into our sideways mode. The NASDAQ, same scenario. We're in a sideways mode. We closed below the T-line with that big reversal yesterday. But today they told us the selling wasn't there. So it's kind of a logical analysis, say we're probably moving sideways, waiting for the 50-day moving average to catch up. Now, part of the commodity world or futures world, you can see what's happening in crude oil prices. Coming back up, getting to the overbought area, be very conscious of what happens once it gets here to the 50. Now, the analysis right now on crude oil is, oh, pshaw. Well. The type that doesn't like to make the same mistake 7 times. So we're probably caught in a range here. Now, what's that tell you about the crude oil sector? There's probably not anything real magnificent going to go on other than what's going on in each individual chart. Gold, as you can see, is kind of stuck right here. And stochastic's coming down. So that might mean they're coming back one more time to test the 50, making gold stocks, as we see in things like Nugget, just not really moving in any great direction. So when we see something like this, whenever you see things moving sideways, what's your risk reward at this point? Well, we don't know whether they're going up, going down, or going sideways. And the whole point of candlestick analysis is we're trying to find situations that tell us we have a high probability that it's moving in this direction or a high probability it's moving in this direction. When we lose that element of visually seeing what the probabilities are, move your money someplace else. It may move sideways for the next week, 2 weeks, 2 months. But once it breaks one way or the other, now you come back in and take advantage of that. I don't quite understand what a left-right combo is. Does this have to be a down day followed by an up day? No. A left-right combo is a doji followed by a bullish engulfing signal. Which ones were we looking at? I'll find you one. It's just a doji. Remember, doji means indecision. The next day they do a bullish engulfing that tells you exactly which way they're going. More short for Nugget? No, right now, Nugget, I wouldn't be, I wouldn't be long or short. There's just nothing there to tell us which way it's going. So remember, we've got 10,000 entities in the markets, which makes it very easy on simple candlestick scanning techniques. But sometimes there's a sector you don't want to be in. More than likely, there's a sector someplace else. Yeah, where do we see? Oh, over here, this little day right here. Notice the doji. The next day they did a bullish engulfing, and then they confirmed it. That usually produces a very high probability of an up move. The fact that they brought it back down through the halfway point of this candle that told us the bulls were in control and closed below the T-line told us, nah, the bulls aren't there yet. Whatever you were buying on this day that was fizzling, you come right back out. And that's part of that 33%. Not every trade you're going to get into is going to work. So if you know that 1/3 of them won't, even though that 2/3 of them, if they work, some of them might be up 0.3%, some of them might be up 300%. But at least we know when we get into a positive trade, the probabilities are in our favor, but we know when to get right back out of that trade if it's not working. Again, going back to that sage advice that most money managers provide for you, which is cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Candlestick analysis does it very simply with common sense graphics. What were we doing? All right, so the other things that we're involved in right now is over in our futures trading area. We're short soybeans. Wave 1, wave 2, wave 3 working out very nicely, but it's starting to base in here. So we're getting ready to close out this position if it comes back up through this level, because that tells us that's where the buying is. On the other hand, it comes down through this level, it tells us our downtrend is still in progress. The 20-day moving average doesn't become effective until you see a very long, steady uptrend. I don't have it here. Maybe I do. That would be way back. Usually when you have a steady move that they can't bring it back to the 50, they start using the 20 as support. So it's not a major moving average. The 20 or the 50 and the 200 are usually the predominant ones to go after, to watch. And we're also short sugar. Again, a failure here. Again, notice what they did as stochastics are coming up. Shooting star up above the T-line, but by the end of the day, they brought it back down. That told us if they started trading weaker the next day, that was telling us our downtrend was still in progress. So they traded up a little bit today, but until we see a buy signal confirmed, we stay short. Oh, back on soybeans, yes. We probably were, let's say I can pretty much tell you. On this trade, it was right about here that we saw the failure, that if they started trading lower, we started shorting it. Okay. Biggies, I know a lot of people were asking about Amazon because we got a lot of spreads on Amazon. So we did a left-right combo. Carol, this is the doji followed by the bearish engulfing signal. Stochastics in the overbought area. Had a nice little scoop pattern breaking off the 50. Now it might be time to be taking profits, especially if we wake up and the market is a little bit soft and they're opening weaker. More than likely they're coming back down to test the T-line. Are they going to hold at the T-line? Have no idea. Close out the position. Watch to see what it does. Now, on that basis, because we're open a lot of spreads, we'll probably be taking profits because we started buying the spreads down in this area. And then recalculate to see what new spreads or new trades we want to put on. The 3T line is this. And then again, that's a function of the further we move away from the T line, more effective the T line will become. Stochastics are at 12.33. What's the green moving average? That's the 3T line. Yep. Okay. Apple got a little bit soggy today, but you can see what it's doing. It's been a nice steady eddy, pretty much using the T line as support, but it also did a little left-right combo. So once again, if we wake up tomorrow and the pre-market futures are showing the Dow is going to open up down 60 points and the NASDAQ down 20 points, if you're long Apple, you might start taking some profits because that left-right combo is an extremely indicative message telling you what's going on in investor sentiment. Tesla, you can see the J-hook pattern. You can see how they've gapped up through this resistance level. So the question is, how far back do you look? Well, this looks like a fry pan bottom setup. But if you look at the bigger chart, pretty much tells us we got a J-hook pattern. And how long do we stay long on this one? As long as it doesn't close back below the T-line. Yeah. But that might be. So that's what we will kind of want to look at is how this market opens tomorrow. And but as we can see in the overall sentiment, I mean, it's come up nicely consolidated, Any more positive news puts us into the next wave to the upside. Why would we suspect the next wave to the upside? Because they're back here in the oversold area right about on the 50-day moving average. Stochastics moving up. Be more inclined to think that we're still in this uptrending channel. Let's see, what else we're going to look at? Netflix. Netflix is the weak sister. Notice the direction of this, and this is the nice thing about the visuals of candlesticks is we can see, is there a lot of strength in Netflix? Nah, it's not really moving anywhere. It's using the 50 as support, but there's nothing yet to tell us we want to be a buyer. Stochastics are heading down. There's no buying going on. So the ones that do look good that we're in is BKD. Notice the gap up through the T line after a Morningstar type signal. And how long do we hold on to this one? Notice what it's doing right now, doing a little J-hook pattern. What happened when they pulled back? A couple of days of indecision, dojis. You can still be buying this one, even though it's up a good percentage. It's got a J-hook pattern. If this wave and this wave are the same, that tells us we could probably be getting through the 50-day moving average. Now, IPXL, there's your best friend signal. Broke up through the 50. What happens when they break through a resistance level? They come back and test it. What type of signal did we see when they came back and tested it? Morningstar signal, bullish confirmation. If this is wave one, this is wave two. Wave three should take us back up into the trend trajectory, giving you another 20% to the upside. For some breakout patterns and J-hook patterns, continuations you do. Buying the oversold. Yeah, sometimes it won't get to the oversold. So the difference between a pattern and a signal is you're buying the signals when your stochastics are down here in the oversold area. You're buying the pattern usually when your stochastics are in the overbought area, especially on fry pan bottom breakouts. Now, Kara, again, using that best friend analysis, there's a doji, there's a gap up through the T line. Where's our next likely target? Well, you can see there's a trend channel here, so we're looking for 21 plus on this next move to the upside. What's the probabilities of it moving up? Well, everybody else can see a trend channel, so they're probably not selling. So there'll be less selling pressure as it moves up to the top of the channel. UFS was one that we were short until we saw the bullish harami. And what do we expect when we're down here toward the oversold area on a bullish harami? If we were to stay short, it had to open lower and trade lower. The fact that they gapped it up told us get out of this trade immediately. Now look what we have. Bullish candle from the bullish harami. Doji, bullish candle. We've got our doji sandwich. We can still be buying this one. Yes, the signal will still be okay on Kara. Remember, the number one criteria for any of our analysis or any of our buying is the signal itself. Everything else is confirming indicators. Notice what we're getting right here. The stochastic starting to curl back up. Notice what we're in, an upward trending channel. Notice what we did today, a doji gap up best friend. And what do we know about our doji sandwich best friend? It's usually one of the strongest signals. So holding on to this one, anticipating they're bringing Kara back up above the, back up to the top of the trend channel. NVGS. Kind of your fry pan bottom. There's your Morningstar, which we call a dimple because usually this Morningstar dimple is halfway between where the fry pan bottom started and where the fry pan bottom broke out. So when it broke out, had a bad day, but what's our simple analysis or simple criteria for staying in a fry pan bottom? You stay in as long as you don't see a sell signal and a close below the T line. We recommended NEWR because of the little bullish left-right combo, gap up through the resistance level, tells us we're wave one, wave two, now in wave three. And chug is a good example of when a signal pattern doesn't work. It looked good the other day. Broke out to the upside, but then came back down and closed right back here where the pattern was starting. close below the T-line. What's our simple rule of a fry pan bottom? You stay long until you see a sell signal and a close below the T-line, which told us this pattern wasn't working. On to something else. A doji sandwich. Doji sandwich is a bullish candle with a doji. Then what do we know about our simple rule of the doji? It's going to move in the direction of how they open after a doji. If it moves positive, we've got a doji sandwiched in between these two bullish candles. Usually on Rai is right. Yep. And VCR. These are the breakouts that you're looking for. Now I say looking for because you had kind of blase trading along here. Then they had the doji gap up. There's your message. We call that the message because even though it's selling off, the message was still there. They were trying to get into this with great enthusiasm. So what benefit do we have with candlestick charts then? We can watch to see when the selling has stopped. There's our bullish Harami, the day they were buying. So the aggressive trader can be buying on positive trading tomorrow because we've already had the message that they've broken out big time, profit taking's over. Now that strength will continue. The difference between a signal is usually a 1 or 2 day, 3 day signal. That's your 12 major signals. The hammer, the doji, the morning star, the bullish Harami. A pattern is a much bigger move, like a J-hook pattern or a fry pan bottom. So it's different than a 1 day signal. Now, the accumulation of those signals usually make a pattern much easier to recognize. Another one, big price move. Look how we broke out. Look, and this is where, look what the activity was all the way up here. Then look what happened. Something broke this out. Then they gapped it up again. When do you want to be buying? Well, these are the type of charts that tell you something new and big is happening, that you can be trading much more aggressively. But now notice what happened. Once they started selling it off, again, there's our morning star signal. What's that basically tell us? That the selling has probably stopped. The aggressive trader, probably trading off the 10-minute chart, can be buying on positive trading tomorrow. So essentially the signals and patterns give you a much more clear indication of what's happening based upon a pullback. Let's make this a little bit bigger. This one's telling us it's not quite done yet, but if it opens positive tomorrow and starts trading up, that tells you after the doji, if they're opening positive, they're going to move positive, that their profit taking is over. Once again, notice how far away you were from the T-line up here. So if you happen to have bought in here and they gapped it up and ran it all the way up here, what's our first inclination? I say, what's our first inclination? My first inclination would be, man, there's something happening here. I'm going to become rich. Well, now I've learned, all right, watch that far away from the T-line. If something good's happening, they're going to continue it up. But if I move to my 10-minute chart and they start selling back below the 10-minute T-line with a sell signal, take your profits up here. You can always buy back if it comes back up above the 10-minute T-line. ARTX. This is not. Something's wrong there. Oh, I don't know why I have that in here. Oh, breakouts. Notice how they gapped this one down, telling you, again, that strong move to the downside. Usually, Carol, I can wait. If I see everything setting up, and that's part of the entry and exit strategy, you got 4 coordinates, how the market is opening, how your stock is opening. If tomorrow I don't know. I haven't picked out one yet to go after tomorrow. But if I see something that has a good buy signal to it, and I see the market opening up strong the next day, and I see the stocks opening up like it should, and I think everything's moving in the right direction, I might buy within the first 30 to 90 seconds. And if it doesn't, I can wait 5, 10 minutes, see which direction everything's going. Hold on to your individual ones until I tell Jim to do the double line, and then I guess tonight, because we're going to be running late, just try to do one. Sun, there's that big gap up. So the reason we show this is, look, it's kind of a kicker signal, had a down day, then gapped up. Why are we showing this after it's had a big price move? Because a lot of people say, shoot, I don't want to buy a stock that's already up 5, 10, 15, 20, 30, 40%. You do if it's going to move another 40 or 80%. Yeah, it's already gone past the blue ice failure. There may have been something else on here that I might have been trying to show. I can't think of what it is. Don't worry, I've got plenty more to look at. Fred's gapped up after kind of a little inverted hammer after doji. You can be buying this one on positive trading. Obviously, watch to see what's happening here at the 50. Then your next area to watch is this downtrending channel. So even if it popped up there, you'd still have about a 20% upside before you run into your first resistance level. MXL. Notice you had your best friend gap up. It kind of fizzled in here, but what would be our main criteria? Notice the left-right combo. We needed to see it confirm, which it didn't. It opened positive. The only way to stay long was for it to open positive and trade positive, which it's doing. Now, why would we wait? Because we've already had that strong signal breaking out of this level. That as long as it stays above the T line, we want to stay with it. ARTX. It's really not that much of a buy signal. It had to be something substantially strong. I wrote it down for some reason. I don't know why. Now this one, this is where you've broken this little downtrending channel. Let me see if I can do this. And it did it with kind of a little slow curve. This tells me something. It tells me they aren't stuck here anymore. Stochastic's still coming up. They bounced off the 200. That one's got prospects of going higher. So I say prospects of going higher. If we analyze everything we know about trend analysis and the signals, doji, bullish confirmation through the resistance level, just gives us that much more probabilities we're heading up further. You wait until the end of the day to exit a bad trade. Yeah, the end of the day may be if it's getting to be 10, 20 minutes, 5 minutes before the close, and they aren't bringing it back up, yes, I'll close it out. What chart are we looking at? Oh, this one right now, this one is BGFD. And you can see what's happening on Angie's list. There's a fry pan bottom that broke through the 50, and it hasn't closed below the T-line. This one's got good buying prospects because of breaking out through this level and the T-line crunch continuing that fry pan bottom. Let's see. Hold on. Let me keep asking the questions. When I get done with all of them, I'll come back. Now, the kicker signal is one of your strongest signals, like we saw in Con. This is why it's like gap up kicker signal. Tells you there's still a lot more upside. Restoration Hardware. Notice the kicker signal. Started this strong uptrend. SQM. Look at this kicker signal. Yesterday it opened here and closed here, failing at this breakout level. Today they did a kicker signal up through that level. That tells me there's probably a lot more side, maybe all the way up to what this trend is, or at least up here to the top of that trend channel. So anytime I see a kicker signal, I'm trying to figure out how to get in as fast as possible. Jazz, same thing. Once they did a kicker signal to the upside, I would suspect that the uptrend is going to remain in progress. Another kicker signal, an FGEN. Just puts you in a situation where the prospects of it going higher, especially if it opens positive, breaking out through this level, that you're going to have more upside. And I'm trying to get back to our best friends. Let me go through these kickers real quickly. L Brands, kicker signal today. You can be buying this one on positive trading, anticipating a move back up to the 50-day moving average. This is called a trend kicker signal. Notice yesterday they opened it here, closed it down here. Today they opened it here and went positive. That usually indicates there's more upside. So if there's more upside, we have a wave 1, wave 2 J-hook pattern in progress. And notice how it's supported right here on the 50. But if they break through this level, look for the magnitude move to be about the same as this right here. Again, this is all just based upon what normal human nature does. When we saw the kicker signal a couple of days ago on TMI and it sold off hard yesterday, it wasn't a concern. It wasn't what we wanted, but it wasn't a concern because it didn't close back below the T line. This one can still be bought on positive trading because of this signal right here. No, that's not a kicker signal. That's your best friend. That's your doji gap up. Does a kicker require a gap or just a reversal of closes? No, it requires a gap to where it opens and closes here and then opens at or above the open and goes the opposite direction. Yes, the MGIC is a best friend signal. Okay, so again, when we're doing a quantitative analysis or scheduling of the signals, our top one is the best friend. Anytime we see a doji followed by a gap up, that has a high probability that we're going higher. Does convergence of moving averages give a signal more oomph? Not necessarily. Remember, our number one criteria is the signal itself. Now, you can add those, and that gives you a little bit more evidence that they were bouncing up off the moving averages. So that just gives you a little bit more, again, that convergence analysis. The more pieces of evidence that we can put into our visual analysis, the higher the probability that everything's working in the right direction. Salt was another one where we saw the little doji gap up, Morningstar signal, starting your uptrend, same scenario down here. Doji gap up. So that doji gap up, and I'm just showing these because these are new or once recent trades. Here's your kind of your little doji hammer, or not doji, but kicker type signal, starting a very strong uptrend in fizz. BPT. There's your morning star type signal, little doji gap up, started your uptrend. So I'm showing these just because the probabilities of being not only in an uptrend, but a very strong uptrend is based upon seeing that little doji gap up. Gives you a much stronger probability of being in the right trade at the right time. Question, is a kicker signal stronger than a best friend? As far as an individual signal, yes. The only difference is you're probably going to see a bunch more best friend type signals than you are kicker signals. So again, we put the kind of quantified everything by which signals are the strongest and that we can see with consistency. All right, let's see. How much more do we have here? What did I just do? KOS. Wee little teeny gap up. Is that what I was looking for? I think so. Again, you can see kind of a morning star type signal. Little gap up. So somebody was asking, does that gap up have to be very big? No, remember our simple rule of a doji. The price is usually going to be moving in the direction of how they open it after a doji. Yes, the fact that your best friend signal is a doji followed by a gap up, it's stronger than a bullish engulfing. Now, remember, this is all on a relative basis. Your bullish engulfing is still a very strong signal. That's why it's one of the 12 major signals. So don't get sidetracked on that because one signal is stronger than the other, that the other one isn't still a good signal. We're looking for that gap up, as we saw in BBRY over the last few days, that this one's still in a strong uptrend, kind of a kicker type signal. Opened here, closed here, gapped up, and went the opposite direction. Wicks, it was down here. It was showing the doji gap up. MBT, doji gap up. And Hubs had the doji hammer gap up. So what's our criteria? We want to stay long as it stays above the T line. Notice what happened today. They took it down. But this is why we usually wait to the end of the day to see what happens. We still have a doji gap up. Now we have a doji hammer. If it opens positive, you still can be buying this one with the anticipation that the next move is up here to the top of the trend channel. KRNT. This is kind of your scoop pattern. There's your J hook. This is why we look for the patterns. BPMC. So I'm kind of showing these because there is 12 major signals. There's about 8 patterns that work very effectively. And the reason we want to trade a pattern versus just a steady uptrending stock, if the market's moving up slowly, is more than likely the pattern is going to produce a lot faster, bigger profits in the during that uptrend. So here's some that are looking good. There's the Morningstar signal right here at the T line, stochastics in the oversold area. This one looks good to be bought on positive trading. David L. has been touting noodles. Notice how noodles broke out with a little doji gap up, then a kind of a doji sandwich through the resistance level of the 50 in this downtrending channel. Now we've broken through the 200. What happens when we go through a resistance level? They come back and test it to see if it's going to act as support. You can still be buying this one, even though it's already moved 100% on positive trading. This may move another 100% from here. Is it not recommended to buy stocks in the middle part of the day? I usually don't. I would say 85% of my trades are done during the first 45 minutes of the day, maybe another 10% done in the final 15 minutes of the day, and then 5% if something big is happening one way or the other during the middle part of the day. Bob, yes, or Bob All, JQ. A lot of people have a hard time. This is why when we show all the different patterns, this is why we're kind of doing the Cliff Note session tonight. That's why we spent more time on the best friend. And the reason we're showing the best friend is if you can't remember everything, learn a few of them because you're always going to have trades. That's the nice thing about our scanning of candlestick signals. Out of 10,000 trading entities, you're always going to have probably more trades than you're going to be able to handle. So at that point, it just becomes a cultivation process of which ones are the best ones for you to trade. There's another Morningstar signal. This is APTI. This one has the prospects of bouncing back up to the 50 on positive trading. So I tell people you don't have to learn all the signals and patterns. But the nice thing about candlestick visualization, this is what we call the bobble. Notice how it came up, hit the resistance, came back, did a buy signal, bobbled, went right back through the resistance. That means there's more upside. The nice thing about the visuals of candlesticks is you don't have to remember all of them. But what I usually did back in my early days is I'd keep going back through the charts or the lists of signals I had at the time and just look at them, not trying to memorize them, but just recognizing when a pattern or a signal that if I saw it again, at least I could go back and at least recognize that it's a pattern. I could go back and find what it meant again. There's a nice breakout on a J-hook pattern on Southern or Select. And NTNX, another Morningstar signal. We'd be watching to see if it broke up above the T-line. Same thing on the bearish side. Look how flat we were right in here. So if you stayed long because it's still above the T-line, this is part of the education to say, all right, when it gapped down today and didn't come back up with any significance, close out the position. Because the whole point of candlestick analysis is we're trying to find situations that tell us we're either moving in this direction or moving in this direction. If we get into something like this and it's telling us it's going the opposite direction of what we want, close it out. The faster you can get out of a losing position, the faster you can get back into a winning position. We did that on NVIDIA in the options room. We were waiting for this to break out to the upside. We weren't long or short because what was our direction right here? Absolutely nothing. Now it told us which way they were taking it. They're still taking it in a downward direction. And so that's the same thing we're watching on Kiwi right now. We're not in this one right now. We took profits because we had our J-hook pattern, had a bearish Harami, got out in here. Now what's it doing? We don't know. It could go up, it could go down, go sideways. So what's our strategy? Well, if we think it's going to go up, we'd rather be a buyer of it up here, knowing that it was breaking out to the upside. How do you determine or scan the stocks that are more explosive movers? Just by simple scans each day or even updating your charts, which only takes a minute or two each day, and say which ones had the biggest percent price move. And if I see ones that have had a breakout and it came off a signal, yeah, now I found my explosive mover. So same scenario here. If we think we're in an uptrend and they gap it down, close it out as soon as you see that there's nothing there, because if you hang on to it, what is your investment strategy? You're hoping they're turning around and take it back up. I've discovered if it turns out to be a bad trade, get out of it, because that gives you more time to get over and find a trade that's working like this to get the losses on that trade back again. PTLA broke down. You can be shorting this, or is your first target the 50-day moving average. Halo didn't hold at the 50-day moving average after gapping down. Where's your next target? Probably down in here in this range. BRFS. Which direction is this moving? It's in a downward trend. Now what happened? They did a couple sell signals, confirmed. Next target's probably back down into this trend channel. So this, again, it's not rocket science. It's very visual to see which direction a move is going. And when we see a sell signal, here's our bearish J-hook pattern. Failed at this level. Tells us there's probably some more downside. And BIDA. BIDA had the potential of doing a J-hook if it had traded positive. But it failed, came back below the T-line, couldn't get back up above the T-line. What's our next analysis? Well, they failed here. They did a doji. If they open it lower, common sense, we're going to do a doji sandwich, which means we're heading lower. Which means the 50 are next likely target. Okay. Yes, if see. Many trades you get bogged down, remembering to just learn a few. If you learn the best top ranked signals and patterns, which quickly are the best friend, the left-right combo, the kicker signal, the J-hook, the fry pan bottom. If you just learn those, you're never going to run out of trades. Do you buy at the end of the day in anticipation of a move? Very rarely, because what's the only benefit you're going to get by buying at the end of the day? That the next day they gap it up. And that rarely happens, or you can anticipate a gap up. I would rather be a few pennies, 10 cents, 30 cents, $1 late, but know the probabilities that I was in the right direction at the right time. So I'd rather wait until the next day. Yes, the mouse pad has the 12 major signals on it. We also have a beautiful, glossy 2-foot by 3-foot poster that every American family should have hanging up in their living room with all the 12 major signals. Okay, are there any general questions on candlesticks? Messed up. All right, to get a lot of stuff cheap or on a lower price, grab the bundle. I mean, we're not trying to bilk anybody. We'll always try to make it that you're going to get more than your money's worth. Eric, I've had people where I would do live sessions when I lived in Houston. I would do it for the futures trading room, the Forex trading clubs, that sort of thing. And every time I did it, people would keep coming back, and I'd see them 8, 10, 12 times. And I'd ask them, don't you get bored with this stuff? It's the same stuff over and over. And their answer usually was, the more I see it, every time we see something, something else clicks. We start recognizing things much better. George, yes. Usually I will buy, if I see something gapping up, now let's say something like this, where I know it should be trading positive after a doji, I start seeing it trading positive, yes, I'm going to go after it because I know the probabilities are in my favor. trying to find something. Let's say I was trying to buy Kara or waiting to buy Kara and saw it did a doji kind of here at the bottom of the trend channel and it opened positive. Yes, I'm probably buying it within the first few minutes. The first thing I want to see is that they're opening it and trading it positive. I don't want to see them gapping it up and then immediately selling off. That tells me, all right, let's just wait until the selling stops and they bring it back up to that price. Oh, man. Okay. Kicker signal is when it opens here and closes here, does a dark candle. The next day they gap it up at or above the open of the previous day and go the opposite direction. That's your kicker signal. Your best friend signal, let's see, there's best friend signal is a doji followed by a gap up. Oops. I wonder there's no more questions. I'm not scrolling fast enough. On the open gap up for the best friend, do you go ahead? Oh, we did that one. Oh, TM, they're wildly expensive. I think the mouse pad is like $10, $12, and the poster, I forget, $19 or something. Oh, the latest classic car. I haven't bought any recently because I don't have any more room for them. When I put them all in the barn for winter storage, I've got to jockey them around. And so, what is the difference between a best friend and a green flag? I don't remember what the green flag is. Best friend, again, is that doji gap up. If you buy one day on a confirmed signal, do you keep watching it that day to get out if it fails, or do you wait for the next day? No, as we saw on this day, this was a kicker signal, gapping up and trading positive. That was a kicker signal. That's what we wanted to see, breaking out through this level. The fact that they came back down through the open and closed down here said, get out of this trade. Or if you didn't get out, you needed open positive and trade positive. And we saw what happened the next day. Now, not to get into our stop losses, but if you didn't get out here and you saw it open positive the next day and saw it trading positive, very simple. You put your stop loss right here at the previous day's open because logic says after a big shooting star in the overbought area, if this was a breakout, it should be going in this direction. If it came back through this direction, that means we got a shooting star up here being confirmed, close out the position. So again, the stop losses can be put at very logical places to tell you it's time to be out of that position. Oh. David, I use the 10-minute chart in intraday or intraday trade futures like soybeans and gold and that sort of thing. But once again, if I see something that's moving too far away from the T line, I forget which one it was. Oh, cool. Look how far, look where we are on the T line. Pretty close to it all the time. Then look where we are up here. A heck of a long ways. That's when I flip to my 10-minute chart. Yes, the recording will be available, T. And those are sandwiches you buy on the bread are up closes if it breaks out. Doji sandwich you buy if the bread are up closes or if it breaks out. I don't understand. If I'm buying a doji sandwich I see a doji sandwich setup, which is a big bullish candle. Have they launched missiles? Lost Tomahawk missiles at air base in Syria. All right. Well, at least that means they're not going to sit around and do nothing. No, doesn't necessarily have to gap up above the T line as a best friend. It's a additional confirmation, better confirmation. But again, your best friend is still a doji followed by a gap up. It might bring you up to the T line. Remember, the further away or further below the T line you are, the higher the probability it's going to come back up and at least test it. Oh, what's that done to gold? Let's take a gander here. Starting to move up. How long has it been doing that? Oops, I just popped it, I guess, in the last 5 minutes. And let's see what the dollar's doing. Doesn't look like it's doing too much of anything. Okay. Oh, I'm watching Fox News. I'm sure it must be on all the news stations. Betsy, I've never figured out why people like Caterpillar because it's just not a tradable chart, but it is moving up. So Nora in our options room said it has good option trading. So I suspect your next target is up here to test the $100 level. Russia warns U.S. Should be slide showing 60 missiles. Okay. Buddy, it probably is. It probably just gave it a different name, a different title back then. Crude oil up. Let's see. And, yep, big spike just in the last 10 minutes. Oh, John, or who said that? TZ, never anticipate what you think should happen. There's so many times, remember, there's people out there that are constantly analyzing what results are going to be. So I don't even take the time and effort to analyze what might happen. I just watch to see what everybody else's analysis is. And if they're buying, that means somebody a lot smarter than me is making decisions. Let's see, GCAJ7. Yep, just moved up from $5 up to $11. All right. Oh, that's all right. What time does the pre-market open? The pre-market's always open. So if we're looking to see what the pre-market futures are doing, tomorrow, I mean, they're always on the little bugs on any of the financial news stations. You just watch to see. So let's say we wake up tomorrow and the pre-market futures are down here. That tells us what they're doing. If they're waking up or wake up and you see them up here, tells us the probabilities are they're heading higher. It should be above the wick of the doji. But if you've got a long-legged doji, I'm trying to see if there is one somewhere. If you had a long-legged doji where it traded up here, traded down here, the next day from where it opened, they gapped it up. It's still a gap up. It's telling you which way they're moving. Futures are sinking, all right. Now, remember, this is right now. This is the knee-jerk reaction. The important time that you're watching your pre-market futures is about 5 minutes before the market opens. Because that's when everybody's making the big money is making their decisions. Right now you should be looking at the Dow. If a stock you are about to purchase due to a confirmed signals, are you influenced by the amount of sellers or buyers, etc.? No. And there's always the old adage that the amateurs buy in the first hour, the pros later in the day. I don't care who's buying. If somebody's grandmother is buying, it's going to move the price up. I'm buying price, not who's buying. When does the pre-market for U.S. stocks open? George, they're always open. The pre-market futures, or the futures, are always open. What are the good oil stocks? That's what you can easily stand. Now, whiting, over the last few days, came back up. The reason we like whiting is because my wife's relatives live up there in North Dakota in the Balkan field, and whiting is a big participant up there. And so you have a chat room, Steve? Yes, George, every day. We usually have around 160, 180 people in it every day. And we also have a options trading and futures trading chat room. There's only about 20 people in there. CXO, yeah, or you can be buying crude oil itself or the fund, USO. How big is your option service? I don't know what you mean by big. As I say, we got about 20 people in there. The reason we have the options room is because there was option traders, and if they were out in the main room, their commentary or their verbiage confused other people. So we just opened up a separate room for option traders because they're usually talking different strategies that people in the normal room, if they're not trading options, don't really understand, and it confuses them. So we have Michael Tomset, who is an excellent teacher on options. He comes in for an hour or so every day, a couple times. I try to come in for a few minutes every day showing which strategies to use. But it's a learning process and an information process in that room. George, if you would email Abraham at Candlestick Forum. Becky or Jim, can you type in Abraham's email? Yes, these are members' chat rooms. That's why you want to be a member of the Candlestick Forum. Again, you get way more money or money's worth than you expect. Okay, thank you. Okay, and with that, Jim, go ahead and do the double line. Yeah, try to keep your quest to 1 because we're already at 9:30. So that's why, again, 2 pieces of, or why we try to get more than everybody's money's worth. It's not all that expensive on a monthly membership. You get 2 or 3 extra trainings each month on top of the Monday night and Thursday night sessions, or we'll do a live sessions for members, maybe one night doing the topic of entry and exit strategies. Another night we might be doing scanning techniques. For the options room, we might be doing the benefits of debit spreads or credit spreads. So you get a lot more information than you anticipate or need, not need, but you get a heck of a lot more than your money's worth. That's how we've been training people how to use candlesticks for the last 15 years. SSH. You can get ready to buy this. Let's see. I don't have my volume. Looks like it does a good amount of volume. So you can be buying this. First target should be the 50. UVXY. Whoops, I've done something here to make this bad. Still kind of flat in here. Nothing yet that would make me want to be long or short. The Qs, still flat, just like the NASDAQ. So Qs puts, not yet. Unless, again, I would still wait. Can anybody see what the Qs are doing right now live? Click, get ready to short this if it opens lower. Now, if you are short, if it opens positive, close out the short positions. Please explain again what it means when they keep on opening it higher and it closes lower multiple days in a row. That tells you exactly what's happening. But every time they take it up, they're dropping it back down. That tells you that the bulls aren't really that strong. Doesn't make for a very strong signal, so, or a strong pattern. So even though they're heading up, it's not showing any great strength. ONTX, there's your volume spike on that big breakout that came back down. After that, I would be out of this position because you're right back here in this trading level. Nothing there to tell you there's any great resiliency to the upside. This is a perfect example of your best friend. You stay long until you see a sell signal, which is your shooting star, and then a close below the T-line. Should have been out in this area. Right now, you can be ready to go short if it opens lower because your stochastics are still heading down. If it opened lower, it means you've got a bearish doji sandwich in progress. Same scenario on TGTX. If it opens lower tomorrow, stay short. First target would be right here. Second target would be your 50-day moving average. These targets are based upon what you can see everybody else is watching. Big inverted hammer today. Bullish harami. Wouldn't be trading this necessarily, but if it does open positive, remember, after an inverted hammer, your probabilities of an uptrend are extremely strong. That the probabilities are like 95% or greater that it's going to be more upside. Moss, I wouldn't be long or short because there's no direction here to tell you which way it's going to be going. MSM. All right, something got stuck on that chart. Sorry, I'll have to come back to that one. Whoops, it did it right as I was getting off. Okay, something's happening here. All right, another big gap up. Look for a 45 degree to come off of here. If you're buying on positive trading, don't let it close back below the open. MSM, little kicker type. It looks like a kicker type signal. I'm colorblind. No. So now it's come back down to the bottom of this channel, but your stochastics are still heading down. I would stay short, or I'd be ready to go short on weakness tomorrow. CVX, Chevron, nothing here to get excited about. We're still in a slow down trend in the 50s acting as a resistance level. AKTX, again, that big shooting star, it has to open positive tomorrow to stay in this one. If it comes back down through today's open, take your profits. ANW. All you can do right now is stay long as it stays up above the T line. Valero. Nothing of great consequence here. If you're doing anything, you're short. But remember, you're right on this support level, and your stochastics are getting in the oversold area. So unless it breaks down hard from here, I'd be more conscious about covering any short positions. PLX, this one you can get ready to short. You're also on the bottom of this trend channel, but you're heading down, probably making the, oh, you can't short this one. It's only $1. I wouldn't be in it. You should be out of this one. Snap, still nothing of any great consequence here. I probably wouldn't be trading this one. There's nothing to tell you there's any major trend on this one. Blue came right back to the 50, did a doji. Now you just watch to see how they open it tomorrow. If you're short, it has to open lower and trade lower. If it opens positive, obviously they're supporting right here on the 50. The Russell, still sideways, just like the NASDAQ. Agilent, nothing of any great consequence here. I wouldn't, yeah, I don't know what to tell you there. Just not a exciting looking chart. ADHD, bullish engulfing signal. You can be buying this one. It looks like it had a volume spike. So what you have to be careful of is on big days like this, you have to check to see what the volume was on normal days, because if it's trading 1.2 million shares today, and I'm just picking out a number, but it normally trades 140,000 on a dollar stock, you might have a hard time getting in and out of it. ATMN, nothing wildly exciting here except you have a morning star signal. You can be buying. Just make sure your volume is hefty. Big breakout. Must have some sort of announcement. These you start buying based on what your 10-minute chart is telling you. JNUG, just moving sideways. I wouldn't be long or short now. The golds might be popping positive tomorrow, so keep an eye on that. And VIPs, not a great looking chart, but you can see it's actually supporting on the 50. And it didn't do a reversal signal. So if it's trading positive, you just have to be careful once it gets to the first resistance level that because it's not going to have as much strength as a reversal signal, it might fizzle. So you watch more diligently when you get to the that level. Microsoft, I never trade this because as you can see, the percent move on this one has just been nothing that you want to trade. These are the type of stocks that are obviously in the institutional positions. They don't move around very much. PNXP would not be in this one. This was your failure, gapping up and coming right back into the trading range. There's nothing there. Let's see, did we do NKTR? Yes, this one you should be out and be ready to go short if it opens lower. What is future symbol on TOS? Boy, it depends on what futures you're looking at. Thank you, Carol. Will you please put the link for the latest scanning? Ooh, was it this link? I guess my reason that we're starting to push our products a little bit more is Charles Schwab, nothing here. That's not no trend on this one. Oh, I thought the Qs traded at all hours. Okay. Let's see, CC. Oh, back to the reason we're kind of starting to push products is we're in a different market condition, especially with Trump in there trying to be friends to the industry. When I was a stockbroker, I got out of the business back in the mid 80s because for 8 years the Dow went from 750 to 1,000, back to 750, back up to 1,000, did it 3 or 4 times. And after 8 years, I got tired of it. And there was some idiot out there saying that the market could go all the way up to 3,500. We could never figure out what he was smoking. Well, here we are at 21,000 basically, which, looking at any time perspective, seems inconceivable. But there's a whole different build-up, I want to say, tension in the business world to get back on situations where where they can do business again, and that might be putting a lot of money back into the markets. And there's no reason why we couldn't see very soon 22,000, 23,000. So because things look a lot more bullish potential for the next 4 years anyways, you want to know which ones to be in with a higher degree of probability. G-gap in one direction, close in the other direction. Remind you of another pattern. Is G-gap a symbol? I don't understand the question. Ballard Power, stay long. You can see the little slow curve. Still a good looking chart. All right, the futures are crashing. Walmart is just nothing that you can trade. It's too big of an institutional trader. Stuck in this range. I wouldn't be long or short Walmart. It's not for the trading. It's more for institutional buying. Tesla still in a J-hook pattern. CSX, slow curve. You can be buying this one, but I'd be more apt to pay 50 for it, knowing that it broke out to of this top side resistance level. But you do have a fry pan bottom in the making. Galt, just stay long as it stays above the T line. We do MSM. Yeah, you can be shorting this one on weakness. Is the inverted hammer just as effective at highs as at lows? At the highs, it's not an inverted hammer, Michael. It's a shooting star. At the lows, it's the inverted hammer. Oh, gold right now. Let's take another look. The April gold is up 9, almost $10. May gold, yeah, up $10. So it's still heading up. All right. That was the 70s. I remember 750. Yes. I started as a stockbroker out of college at the ripe young age of 21 years old in 1976. Oh, okay. Yeah, remember on election night where the pre-market futures showed that the Dow was going to open up at one time down almost 1,000 points. Oh, on Chalmers. It has to open positive tomorrow to stay in it. If it opens lower, I come out of the position. But by the next day, it was opening up on 120 points. An inverted hammer is a hanging man at the top. No, it's like again, an inverted hammer. I'll find one. An inverted hammer is a shooting star at the top, or a hammer signal in the oversold area is the hanging man at the top. The hanging man has the tail to the downside. Okay, all right, we kept everybody way past their bedtime. Start learning your candlestick signals and patterns. I mean, again, this is what moves markets, is human nature, human perceptions. That's where you're going to get your most powerful trades. Yeah, an attack over in Syria doesn't have any major effect other than emotional on what's going on in the world markets. Tesla is a J-hook pattern. You can see wave 1, wave 2 going into wave 3. Notice how they gapped up through the resistance level. You just stay long on this as long as it stays above the T-line. All right, everybody. We are going to be doing a lot more training going on here in the next couple months. So get your materials to study, and then it'll become much more effective learning when we do live training sessions. So with that, everybody have a good evening. We will see you bright and early in the chat rooms. We'll see you then.